Hey everybody, it's CryptoBirb. It's Adrian speaking. Welcome to today's, I wanted to say Friday webinar, but today is actually Thursday. We are day ahead of Christmas. And today is Christmas, and so I decided pretty much to host a special webinar for everybody, the Christmas webinar for you today, okay? And we're going to talk about a couple of very interesting points that many people tend to confuse too often. We're going to talk about trading styles, trading systems, trading strategies. We're talking about Bitcoin, altcoins, and BPro. If you guys are ready to join for the ride, for the last ride before the Christmas, and well, talk and speculate about current Bitcoin pump going on, make sure you stay tuned because we are going there right in a second. Beautiful, beautiful. I hope everybody is doing okay. Hope you're having beautiful day. Hope you're preparing to take some time off to spend with your beautiful families, with people you love, with people you really care about, because this is what the Christmas is all about. And if you're not celebrating Christmas, then I think the entire world is still giving you some time off. So I hope you enjoyed it. Hope you're getting ready. Hope you're getting tuned in for that. And there is a lot to be talked over this session. So I suggest we go right away, straight away. And there's going to be some presentation for everybody. So I hope you're going to enjoy that, okay? And let's give it a go. Let's give it a go. So as I promised, I wanted to talk to you guys mainly about trading systems and trading strategies. I wanted to guys let you know, the main differences, what you can expect, what you should expect, how we can differentiate, because it's not really obvious. Many people tend to confuse that. I pretty much am sure that if you go and ask out in the people, out in the street, even like most of the traders, to tell and define, trading systems, trading styles, trading strategies, trading plans, etc., they would kind of like mingle somewhere in between. They would not be able to tell you that right away. And this is very interesting. This is very interesting. I hope the voice quality is fine as well. Please keep me posted in the chats. I really hope this goes well. So to right away, to get you guys, very quick reminder. Many people are new. Many people have just joined the market. And because I am a technical analyst, I want to make sure, guys, that you're well familiarized with the definition of the technical analysis, which stands for the price study. It is a price study of an asset, right? We're applying certain indicators, applying the trend recognition, right? So we are studying the price of a given asset and charting that, laying that over the history, okay? Plotting that against the history. Price against history, price against the time is the main tool for the chart that the technical analyst would use, okay? And based on the technical analysis study, based on a study of the price, historical price records, we are trying to guess. We are trying to make some more mathematized guess, some more, not really random guesses, but trying to get it right in order to make money of it. And many people get that wrong too often, because they assume this is a 100% guarantee win, which is not. You're never going to have 100% guarantee win. You're never going to have 100% win rate either over the longer period of time. If you have win rate of 3 out of 3, sure, it's going to be 100%, but the law of big numbers is going to place you somewhere, further away, in a more distant place. Some trading systems that we're going to cover, usually come and imply about 30% win rate. The other ones would have about 70% win rate, and the win rate is not really everything. Okay, the win rate is not everything. Winning is not everything, because risk management is the other factor that you also have to consider always. Okay, technical analysis is also not resistant to market manipulations. Okay, Elon Musk, it's enough to have Elon Musk tweet about Bitcoin and it changes the trajectory. So technical analysis is not going to help you imply or decide when Elon Musk posts a tweet. Technical analysis is not a crystal ball to predict future. It's also not a set of squiggle lines. Many people tell you that, they open up a book, right? They open up a book, they check the first line in the book that says, I don't know, a bullish signal on a technical analysis application in the trading systems is, for example, a trend line breakout. Whenever the price breaks through a trend line, this may serve as a signal. And guess what happens? When it moves in sideways, they have a fake breakout. They have a breakout which then right away fades, okay, and closes below the broken support resistance that turns into support. And they say TA is shit. Technical analysis doesn't work. And well, guess what? Mathematics, math doesn't work either if you cannot use that properly, right? So it's more about getting it deeper, which is something that I'm trying to get you guys familiarized with right now. Technical analysis uses technical indicators, okay, and there are many technical indicators, and there are many 5 types of technical indicators. There is a trend indicators, the type, that tell you about the trends, just like moving averages, right? There is a momentum for timing, which is RSI, Relative Strength Index. There is also a volume, right? You can monitor the volume spikes and pretty much, decide based on that. If you see a volume spike somewhere beneath the chart, then this may imply potential reversal coming, right? It is often said that that the volume precedes the price. Volume precedes reversals. So usually see the reversals, the big spikes in the volumes on the reversal days, right? This is why it often says that the volume spike happens before the new trend shapes. This is an important part for you to remember. Now, volatility indicators, just like standard deviation, Bollinger Bands, or beta for stocks, right? Or many other forms of it. Aside, breadth indicators for stocks, just like advance and decline line, which tells you basically about the overall market condition. Moving averages, just like I'm saying, here, MA50, MA200. What else? RSI, just like I'm saying, the momentum tells you about how fast the trend develops, okay? If there is an upwards momentum trend, then it tells you that the trend accelerates, that the trend doesn't really, just go linearly, that it goes, more and more vertically. This is what you see whenever the momentum per RSI increases. Okay. Similarly, if the price rises and the momentum starts decreasing, just like you had in May, then it may happen. Then this is an early reversal symptom. Volume spikes, just like I said, every major trend reversal has the volume spikes, and volume spikes are defined, by definition, when you have the occurrences are the days, periods, trading sessions where you have about usually 3 to 4 times larger number of trades, because this is what volume states. 3-4 times larger set of trades, transactions done, completed, closed, done a second before, done the session before, right? So if you have something like that, a session of equal volumes, and then you have something like some insane volume spike, right? Some outstanding volume day, and then this is a volume spike. And these volume spikes tend to occur around the market reversals. You had it on the market peak, you had it on the market bottom, you had it at the market semi-peak in a way, 2019. You had it at the COVID crash bottom. The biggest amount of transactions happen always at the reversals, because this is where the most volatility happens. This is where the market is the most engaged. Okay. Same, you had the volume spike on the reversal pretty much here, right? At the lows. You had the volume spike here. Did you? You had not, right? We did not have. We hadn't seen anything, like before the chart was constructed. There was nothing of indication for a potential trend reversal here, which makes me think that we are more in a sideways, right? Rather than a peak, just like we were here. So based on that, you can apply that, to project certain prices and make some more educated guesses. Bollinger Bands, right? And this is chart from some couple of days ago. Now it looks so much better. The price per the volatility, recently has got squeezed, which tells you that the volatility on average has decreased. And if the volatility decreases, then it means that the market starts, making smaller and smaller turns, right? And usually, because the market is pulsating, usually you have, after sessions of lower volatility, you have sessions of expansion, of larger volatility, right? So you see the market pulsating. You see the market pulsating, just like I was saying, here, right? Well, some bottleneck and the larger volatility, right? Bottleneck and the larger volatility. So market is pulsating. It's kind of like breathing. This is the cyclicality. And the breath, it tells you that, for example, whenever the breath per the advanced decline line, for example, on your stock exchange, is declining, then it tells you that the majority of the stocks on this very exchange are pretty much declining. And when they're declining, and if you see, for example, an upward trend going on, right, then on a certain stock, then it tells you that this is an outstanding, this is a case, this is an outlier, right? Then perhaps it's riskier, perhaps it's not worth the risk, because if the entire market is on average going down for most of the stocks, then perhaps this might be, some latecomer in a way that it's about to reverse, right? Perhaps not worth putting all your money in there. And moving to another point, I hope so far it is pretty clear. Let me know, guys. I hope it's clear. I love you all. so many beautiful comments. I love you all, guys. I hope you have beautiful Christmas as well with your family. Wesołych świąt dla wszystkich Polaków też. Kocham was, mordeczki wszystkie. Yeah, so let's proceed. I hope it's clear so far. Trading styles. Many people get that wrong, okay? And trading styles is about the risk profile. Trading styles, everybody, is about the risk. And we can differentiate and tell between three main categories of risk approach. We are talking about somebody who is risk averse. We are talking about people who are risk neutral. And we are talking about people who are risk aggressive, aka gamblers. And when we are talking about the risk aversion, right, that this is something that, well, even if the if the deal is good, potentially, for there is a good bet, you have quite a strong hand in the poker, right? Or let's say, yeah, it's a poker. You have a quite strong hand in the poker, but you have already collected some money. Then every move is your decision, whether to quit, whether to fold, and just pass, or continue, right? This applies to poker, to trading, to everything. And risk-averse person would pretty much always try to minimize the risk, minimize their exposure, minimize their kind of like, exposure in general, right? So while having the choice to play or to quit, they would always quit, right? Similarly, in trading, if you have a technical indicator flashing a buy signal, then risk aversion, more often than not, would perhaps make you ask or question this, 10 times before you open that, or perhaps just by definition, you prefer just to hold rather than trade actively. Okay. Risk neutrality means that if there is a good bet, you take it. If there is a bad bet, you don't take it. As simple as that, right? This is what most of the people actually get to do, right? If there is something promising in the setup that you want to trade, then, well, you may take this trade, right? And then you have certain probability over the time, some reliability, some win rate, success rate, no matter how you call that, defining how good of a trader you are. Although this is not the only metric, just like I said, because you can have 30%, depending on the system that you pick, which we're going to discuss in a second. Depending on what type of a system you pick, you may happen to have 30% win rate on average. And if it's a trend following system, which is usually of lower win rate, and then 30-40% win rate is something very natural, is something very regular. Okay, it's something very regular. And the 30% win rate, it doesn't mean you're a bad trader, because 3 out of 10 trades are won, but perhaps those 3 trades that win are so good that they compensate for all the losses that you take, right? Then your overall profitability over a longer period of and set of trades is what defines your being good trader or not just the win rate. Risk aggressive profile, on the other hand, will take every single bet, every single game, every single trade, because they don't trade to make money. They trade to play. They trade to have fun. When you go to the casino for the first time, well, if you assume that you're going to win against all those OGs that sit there 24/7 for the past 15 years of their lives, then um, well, then it's likely not going to work out well for you, right? And risk aggressive profile takes gambles. Okay, there are certain gambling strategies, just like martingales or anti-martingales, which are somewhat of a different, place, mainly basing that on the randomness, right? When there's a random walk, when there is no trend in the market, when there's a sideways situation, you may gamble a bit because there is no direction, there is no directionality, there is no direction in the movements, right? So sideways, shit coins, giving all in, not really caring to win is what defines a gambler, what defines a risk aggressive person. And for the trading strategies, everybody, uh, to differentiate it, and you know already the difference for the trading styles, right? Uh, the risk aggressive, risk neutral, and risk averse. Here, for the trading strategies, we are talking about your way of getting from the point A, which is set of inputs, to your point B, which is your overall goal output that you want to have out of trading. So you apply that with the use of trading system and the trading plan. In a second, I'll tell you about that. But before, we can differentiate between a couple, usually five, but there are also more trading strategies. Trading strategies, which is the main paths, the main roads, the main not directions, but the main focuses, right? It directly refers to time frames, to time scopes, to time horizons you actually play. Because buy and hold strategy would mean that, just like Warren Buffett, you pick your favorite stock. You don't care about it going up or down, right? And you hold it. And you hold it for years. It can go down 80%, it can go up 500%, but you hold it for years and for decades. And this usually is a time horizon of years, of decades, right? Buy and hold. You just get in, you just get a position, open up, well, an investment to hold for years. On the other hand, you have position trading, which is something that I identify with, right? Position trader takes a position based on, while this is mainly fundamental. Well, buy and hold is mainly fundamental. You would have fundamental methods of investing with discounted cash flows accounting, for the evaluation. You would have benchmarking, like, any other many fundamental ways to invest with fundamental indicators, just like price to book value, price to sales, price to earnings, whatever. And while position trading applies fundamentals with the dose of technical analysis, because you hold the position for a couple of months in here, right? You hold the position for a couple of months. And I really hope so far this is okay. This is pretty clear. It's displaying, right? It's displaying, it's working right. And position trading, which is something that I practice, is that I open a position, not to really gamble about it, not to change anything about it, usually for the matter of couple of months. Similarly, just like I was calling out the reversal on Bitcoin in June, July, earlier this year, half year ago, I got in back then at 29,000, and I hold this still, right? And every couple of months, perhaps every month, if you are very, very eager about that, you evaluate your portfolio and you make only tiny changes or adjustments. Okay, if the exposure is too large, or you take profits. I don't take profits on a daily basis. I take profits mainly on the monthly basis, right? So on top, like on actually the level below, you would have the swing trading, which instead of trading the positions for some time, you take the swings. You take the swing up, swing down, right? You take an upswing and a downswing. This is usually what gives you the range of short to medium term timeframes, which is anything between 3 weeks and 3 months, usually by definition. Okay, you would also have something that it goes down more of the gambling, towards the gambling, which is day trading, which is scalping as well, right? And day trading, which means that you open up, you wake up, you make your research, you do your own research, you do due diligence about it, about the market, and you open up a position and you close the position when the trading day closes, when the trading day ends, or before it ends. So you open up a position, and you hold it for a day usually, right, for a trading session, and you close it before the day, before the day just is over. Also, you would have scalping, which is the most degenerate way of gambling, which, like, if you have the primary trends, the main bull markets and the bear markets, then the primary trends consist of secondary market movements, right? Which is the swings on the markets, and those swings consist and constitute of the tertiary fluctuations, or the noise, the market noise, the daily changes, right? And scalping takes this, right? Scalping takes this, or it bases trading based on, relying on 5-minute time frames, 10-minute, 15-minute time frames. It's micro movements, which is something that usually I need to have a large capital to compensate for smaller profits, for smaller movements, right? The law of percentages means basically that the same percentage earns you more money when you have more money, right? So 10% over 100,000 is going to get you 10K, but 10% out of $100 is going to get you $10, and it's still the same 10% nominally. Okay, so for scalping, you will need to have either leverage, right, which increases the risk of getting it wrong because of the whipsaws, which is the bear hunts, liquidity hunts, bull traps, bear traps, no matter how we call it. I am a position trader, and on the right, you would have the comparison, accumulated return on the stocks, right? S&P, SPY, overnight trading versus buy and hold. So buy and hold is like the main kind of like reference point. It's like the main benchmark. And when you combine it with the risk aversion, with the risk profiles, with the trading styles, then you can tell that the risk aggression increases down the list, right? Here you would have somebody who doesn't really take too many trades, too much trading involved, because they're risk averse, right? They don't want to just do anything about it. They just hold it, right? And down the list you go, the more of a gambler you become. And historical records usually say that it's very, very hard. That it's very hard to beat the market. And beating the market, which means that buy and hold average returns, right? Which is the blue curve. And the blue curve, which is the buy and hold, when it returns 16.2% a year, the trading day, which is day trading, returns 7.8% on average, right? Based on these records. Overnight or intraday, similarly, right? So it's very hard. It's buy and hold strategy in most of the cases for 90% of the people on average, statistically speaking, is twice as much profitable as trading on the daily basis, right? Very important lesson. And here is an example when, instead of gambling on micro time frames with scalping, with day trading, when you rely on the swings or on position trading, right? Somewhere up in the list. So we have a comparison between the green buy and hold, which is the middle one, the trend timing, which is this, the blue one, and outperformance, which is the net difference, right? So what it does, it basically tells you, and this is like quite a long study from 1900s, okay? It tells you that with the application of trend timing, in other words, technical analysis, you can overperform or outperform the market, outperform the buy and hold strategy, which is the average. You can beat the market, you can beat the average by applying technical analysis, trading, and tactics. And talking of that, we are talking about trading systems, right? Betting systems. I hope this is this is going well so far. Please let me know very quick if you understand that. I'm super excited to see so many beautiful words. I hope you guys appreciate it, that I'm spending this time ahead of a Christmas Day with you. I love the fact that you're doing that as well. And yeah, please let me know in the comments if something is very if something is not really clear for you, let me know in the comments. Okay, and back in the stream, trading systems. You can differentiate usually between three categories, which is discretionary trading systems, which are based on intuition, right? You don't use too much of computers. You don't use mechanical systems. You don't use indicators. You just kind of like feel like entering a position or feel like closing a position just because you have the intuition to do it. Discretionary ones. You also can tell between. You also can tell differently for non-discretionary systems, right? Which is with the use of computers and mechanical systems. This is the automated systems, right? Which can be run on AI basis, artificial intelligence, because basically people tend to be subject to human error because of the behavioral, um, well, what behavioral finance explains to be perception biases, right? We tend to undergo certain psychological, emotional changes and um, other suggestions at times, other suggestions, that change the way we think and distort the way we perceive the reality, right? And this is where we kind of like cannot tell between a fact and an opinion, and we tend to have an opinion about the market which may be wrong, or not. So discretionary systems are usually less profitable, and most of the systems are profitable that run on autopilot, that run on computers, that are run by the people, not by the people, but by the computers, right? Just people follow that. And there's also a combination of both, which is intuition plus computers. So we have an input. We analyze the time. We analyze the price action versus the time, right? Of different markets. We combine to have certain conclusions about it. We try to process that and push it through filters of technical systems, of trading systems, which are the ways that we make money, right? Trading systems are the ways that we make money, right? Trading systems is what takes you specifically from the point A to B. Trading system is a tool that you use to realize a trading strategy, right? If you're a position trader, then you may use a trading system based on, well, I'm going to tell you that in a second. And then based on what kind of like trading system or technical analysis like technique you apply, you come up with certain signal that you follow, right? And here we can define the trading systems as a complete, well, system is usually a set, a package, a combination of many different factors, right? And one of the factors, I mean, all the factors for trading systems are listed down below, and they refer to the markets. We have to know what markets we want to trade. Whether we want to trade equities, perhaps we feel better at Forex, right? Perhaps a specific trading system works better for crypto, right? We also have to decide about the position sizing, which is how much we want to buy, how many shares, how many cryptos we want to buy, how many coins to buy, sell. Okay, so we have markets, we have position sizing, we have entries, when to buy or sell, right? We have stops, application of protective stops or trading stops. Stops are the orders that help you manage the risks, that help you define the risks as well, right? So when to get out of a losing position, when something goes against your will, something goes against your plan, then you have to have an emergency plan to cover that. And stop positions, stop orders is something that is a very attractive tool for risk management, especially if you're trading lower time frames. Similarly, for exits, you want to have a warning when to get out of a winning position, not on a stop basis, not when the things go south for you, but when the things go well, which is targets. You have to have targets. And the tactics, right? Which is the technique, whether you apply certain types of indicators, trend indicators, volatility indicators, breadth, etc. Right? Here's an example of Barbicator Pro, which I'm going to also tell you about in a second. And we mainly can tell between 4 or 5 different types of trading system, right? Different trading systems usually come up in the form of, well, one of the four, one of the fifth. Trend following. We can follow the trend. When we have a trend, just for example, a moving average in here, then we only open a position whenever there is a trend starting. Whenever the moving average just goes flat, there is no trend. Whenever there's an upwards trend in the moving average, then we take longs, for example, right? Or we just like it says, you can differentiate between the moving average systems and the breakout systems. So moving average systems are the ones, just like I'm saying, you can, for example, buy every time that the price of an asset just crosses its moving average, its mean, okay, in the opposite direction, and sell every time it actually just crosses and closes consequently below it, right? So we open a position in here and you close a position in here, basically, right? This generates certain delta, this generates certain profit for you. Similar case here, open a position, right? You can even close a position and, well, get a specific front run, right? It may happen that you sell a position because of a signal and the market rallies without you, right? And when you apply discretionary systems, when you apply your intuition, you may decide, oh no, I'm missing out on a trend. I better get in back again, right? And then when you get in, then the market starts going down usually, because eventually breakdown of a trend per the moving average is something that that basically defines the direction or trend reversal. Okay. So moving average systems, the breakout systems, whenever you have a new price target reaching, whenever you have a new resistance breakout broken, right? So you have a resistance anytime the market stops and swings back to the downwards. You have a support anywhere that market bounces, right? Aggregation of buy orders, aggregation of sell orders is for the sells, is for the resistances. And anytime there is a breakout, anytime there is a specific outbreak in price, or a condition for an indicator, a trend line breakout, a pattern breakout, a high and low breakout, for example, you have, just like I'm saying, in a sequence of higher highs and higher lows, perhaps it may happen that you start seeing, breakouts in a downwards or upwards direction, right? You have a resistance in here, then it's broken. You have a new resistance, then it's broken. And then every time it breaks out of a prior price extreme, it clears and clarifies and brings you a new trading opportunity, right? So you can tell and combine usually the trend following breakout systems with different indicators. So we can have breakouts on volatility. You can have breakouts on the moving averages. You can have breakouts on the price action alone, right? When the market is making new highs or new lows. For the pattern recognition, you can also have the pattern recognition ways, right? And the pattern recognition is something just like I marked in here, that you spot a pattern, you spot a chart pattern, and you only trade the chart pattern the way that it's supposed to unfold, right? You have a rectangle box in here. When you see a successful breakout, right, and we test, perhaps this is your signal to trade it. Or you spot a falling wedge in here, right, or a descending channel, and you open up a book of Thomas Bulkowski, for example, and you decide that usually the descending wedge or the falling wedge or descending channel just usually breaks upwards in an upwards trend. So you can just simply enter a position somewhere in the price pattern, expecting an upwards unfold. You can also play the mean reversion, right? Just for the momentum fading. And the mean reversion means and tells you that whenever you have a deviation of a price against its mean, against its average, then this generates a profit opportunity, right? The market compensates you with a risk premium, with a profit premium for spotting a trend reversal early. So just for instance, when you have an average, right, then the price tends to oscillate around it, right? And by oscillations around the average, you can tell that, for example, whenever there's a strong deviation, whenever the actual price action stands out strongly against its moving average, then, well, you can expect the market to be locally overbought, locally overvalued. Whenever the market tells you that the fair price is here, because this is an average, and the market just trades heavily below its average, then it trades below its fair price. It trades as undervalued asset. So mean reversion means that you are fading the trend. You're entering a position, let's say, whenever there is an extreme deviation against the average in the upwards direction and in the downwards direction. But then it may happen that you're going to be early. Trend following means you're getting late in a trend because you get only on the confirmation of a trend. You only enter a position when this moving average starts going up, right? When it doesn't go up, well, you agree to miss out on an actual reversal. But then you enter on a higher probability trade, right? So, but until you catch the reversal, well, then you actually just get a couple of whipsaws on the way. And what happens is that the mean reversion or trend following would have this 30-40% average win rate, where 3 or 4 trades out of 10 are won, but they exist in a trend in something directional, not in a range, just like here it was here locally, or here. You enter on a confirmed trend. When the trend is confirmed, you get late, but you have enough certainty that this trend is going to continue because of the momentum phenomenon. Momentum is what pushes the price. Momentum is the money that moves the market. Momentum is this natural, I should say, this overall phenomenon of market continuity. The price continues to follow a certain direction. Okay. And for the mean reversion, it's actually the other way around. So you're going to have and open up a position, buy position, anytime the market is heavily deviated against its average in the downward side. And on the upside, whenever there's a strong deviation against its average on like above its average, then it generates a short opportunity or sell or take profits. And you can also trade based on the exogenous signals, right? Whenever you have a signal, for example, from VIX or put and call ratios, about the options engagements, or the implied volatility over 30 days options on S&P 500 that the VIX stands for, or there is a news, for example, Fed announces new stuff, right? New inflationary stuff, new inflationary boosts, new money printing. Then this generates sudden movements in the markets, and you can profit from that as well. And for the custom systems, one of the custom systems is Barbicator Pro, something that we had been working along with extremely talented Signalify. Like we'd worked with each other for quite a long time already. And this guy is something special. This guy is something different. Like extremely open-minded, extremely skilled and talented person who helped us, who actually designed in the collaboration with us the Barbicator early indicator of the Barbicator version 1, and the new version, the new release of the Barbicator Pro, which we have just seen recently. And I think it's actually good if we switch over for a second, for a moment, to documentation, because this is something that many people, want to probably learn about, because Barbicator Pro is something new. Okay. So if we go and rush through the documentation, then it works and consists. It is something that has been backtested, something that has been proven to work, something that has been proven as system. This is the trading Barbicator Pro. Everybody is a trading system, just like the trend following system, just like the mean reversion, just like the breakouts, just like the mean moving averages. Okay, Barbicator Pro is a trading system. Is a type of a mean reverting system as well, right? This is a combination of trend following and mean reverting, because you can actually just decide how you want to use it. This is a website about the documentation of the BPro. This is available on our website 24/7 for everybody who wants to read for free and learn about that. And it consists of a variety of different indicators, right? It includes the proprietary, just like I were to kind of like literally read, intraday trend algos, standard deviations, bands. You would include the momentum for that. You would include the Fibonacci levels, of course, as the reference. It would include trend following. It would include the volume weighted average prices, ATR. It would include RSI overbought, oversold. Adaptive ATR, which is the average true range once again. Price oscillators, just like the RSI, MFI, money flow index, MACD, moving average, convergence, divergence, momentum per se, commodity channel index, on balance volume, stochastics, volume weighted moving average, okay, Chaikin money flow, directional movement, and more. Okay, automated support resistances. This is what we get actually in the BPro. Oh shit, nice. Bitcoin is actually pumping very decently because, funnily enough, there was an early signal that actually helped the BPro just rise, right? So you would have, let me actually just check very quick. Okay, so once it loads, because there was on the hourly time frame, I actually put that in my free report recently. It was actually yesterday. I put a warning about the new trend starting. This high time frame trailer, which I'm going to tell you in a second about, basically informed that for the first time with this bull breakout through the main resistance, this initiated a new upwards trend for the first time since the entire crash thing happened, right? So the last time the market was bullish per the BPro was at $56,000. Then the support was broken, and the new downwards trend started that turned and evolved into a flat movement, which got broken with here the bullish thesis, and the new trend started, and boom, we have a massive confirmation additionally on top of that. I love it. Okay, and the main point of the BPro is the baseline, right? The main reference point of the BPro is the baseline. So if we were to turn off the price action, then you have the baseline. The baseline is a hybrid moving average. It consists of a different set of moving averages. And well, just like it says, provides trend, momentum identification, support, resistance. You can use that as a mean reversion as well. Composite moving average is specifically crafted using elements of two distinct types of moving averages. You can customize that. You can use it the way you want, right? In the case of BPro, this is a custom trading system, custom design, something that we had been working on for many months. I just felt I wanted to get you the specific date, but there's been a lot of work put in that. And so good to see the confirmation, good to see the early reversal confirmation actually playing out as we speak. I love it. And the baseline is the main center. The baseline is the gravity center, okay, for the Barbicator Pro. It tells you about the trend, whether it applies to Bitcoin, whether it applies to LRC, or for example the SIA coin or Solana. These are some chart requests that I was doing for the people in the Nest yesterday. Or you can tell how nicely the long-term trend was still maintained and held, and well, escaping the noise, right? And it applies for the baseline as the main hybrid average, composite average. It tells you about the market direction, right? It tells you about the market direction. Aside from that, well, bullish is orange, bearish is usually black grayish, right? This is how it looks. Right? This is the baseline. This is the center. This is the trend, the average composite. And you can use that. You can use that also with the application of something that is called a dual price trailer system. This is something that we had got custom designed by Signify for us, for the Birb Nest community. And we collaborated on that and decided, we were deciding how to actually just make it best to use for everybody who's also a beginner, right? And we decided, after, of course, lots of brainstorming with the entire team, that people would want to see clean levels of supports and resistances at invalidation levels. Okay, and this is how we came up and landed eventually with the dual price system. And the dual price system, dual price trader, it refers to high time frame trader and counter time frame trader. Okay, so this is an actual case study of how trading systems work on the example of Barbicator Pro. And BPro implements a two-stage dynamically adjusting price trailer to identify bull and bear markets, where as in bull and bear trends. And the signals by large dots and small crosses, just like you would see in here, right? A signal on the high time frame trailer and the cross for the current time frame trailer. This tells you about short-term and higher time frame reversals whenever these happen. So those work as actual signals. And this is the reason why, for example, on an hourly chart, when I was doing my report, I said to everybody, listen, watch out for this new trend. The new trend is officially started. Okay, so this is just a consequence. So this works as an early price reversal detector in a way, and as a trend confirmation. And it's dual. It's dual because you would have two options. You can use the high time frame trailer, which is basically this option, and this corresponds with the thicker line. You can adjust it the way you want. Of course, you can adjust anything about the BPro that you want. But it helps me understand and define invalidation points both for shorter term movements per the current time frame trailer, CTF, okay, current time frame trailer, which is this, for example, right? So here you had a moment of local scalping doubt, in a way, intraday doubt, right? That, well, switched from bullish that started in here at 45,000, I think it was 45,000 still. It rallied all the way here to like 30, I think 8,000. The local disruption happened, which was already kind of like overcome. And the new upwards trend started on a short-term time frame, on a short-term basis, while the long-term basis, high time frame trailer, is confirmed by the high time frame trailer input. Okay, so you can adjust and, for example, use only one. If you are a short-term trader, you can, for example, go for the current time frame trailer for the CTF, right? And then it eliminates anything about high time frames and focuses only on the short-term time frames, right? Just like it says, just like it shows in here. And then what it remains is actually just the dots, right? You don't see those thick lines anymore, but you only see the dot here for the bear stuff and here for the bullish stuff, right? So notice how for the first time since the market actually entered the sideways period, the choppy consolidation, for the first time we flashed the bull sign in here, right? And we flashed it somewhere around well, for the major time frame, because this is a higher time frame confirmation, it actually confirms something that may be considered a reliable and early symptom of a breakout of a reversal for a trend. Okay, so this is a case study of Bitcoin. You can also have and include the price bands, the momentum bands, okay, which tells you that you want to know the range. If you want to know the range, okay, like Bitcoin is trading between $42,000 and $52,000, right? Or like then you can tell, for example, that closer to whichever band you are, then the more risk or profit opportunity it generates. If you are in the range between 42 and 52 and you want to enter at 50, then you only have 50 to 52 distance to make money of it. And you have 50 to 42 downwards that works against you. And the other way around, vice versa, right? When you have 44,000 entries against 42, 40, 52 kind of like range, you can anticipate that you actually bought in cheap based on the range, right? So this tells you about the volatility in those price bands that you can actually just enter in here. If you don't like, the trailers, you can enable the baseline bands, right? And the baseline bands are going to show you the volatility, right? The volatility and the momentum. Just let it load for a second. I hope it's clear so far, everybody. Let me know. Keep it posting. I hope you're appreciating this. Um, and this baseline bands or momentum bands, as Signify beautifully wrote about and named that. This tells you about the range that you can expect. Here is a clear confirmation, a clear hourly breakout that is actually living uh, like nothing but bullishness for the short-term period of time. Right? Bitcoin is back in the bulls on the short-term basis. And here, well, again, you have the high time frame trader, you have the current time frame trader, right, which signal the buy pretty much here at 46. Like it's still there. You can keep it this way, just to kind of like minimize, the amount of things that you have displayed in the chart. But here, for the price bands, it tells you that the price action, that the price of Bitcoin has actually breached the momentum band, the high band, based on the based on the standard deviations. So it tells you that local market action, local price action is actually stronger and larger and greater and stronger and fuller of momentum than the typical range, because we broke out of the range based on the standard deviations. We broke out. We came up with a new trend. Okay. And you can use the bands, just like I said, for anything, for any altcoin, for just a case study of LRC. This tells you that most likely, based on the standard deviations on a 12-hour chart, based on the price bands, which actually has flashed bullishness on all across the board already, you can tell. Okay, you can tell that the expected range is something between, well, more conservatively, between the inner extremes or the external or the external extremes, right? So you have the range inside a range. You have a smaller range inside a larger range, right? So we can expect that most of the price action is going to happen between the bands, because this is what fluctuates between the standard deviations. But it may happen that you would see abnormal volatility. And when this abnormal volatility happens, you leave this local range and move to the price extremes. And when you move outside the price extremes, well, this is what defines a trend breakout based on the volatility. Okay. So you can use it this way to anticipate what kind of range am I in, right? For example, if the 1.9 entry is good, knowing that the floor of the range is 1.72 and the high and the ceiling of the range is 2.60, 2.56, right? So this works pretty nicely as a range keeper, and also as a trend confirmation. You also have the price out of price levels, okay, which is something that I often use as additional confirmation, because it comes as significant levels. It's very significant levels. And this is an automated system to calculate significant price levels to present them to the users. This is what Signify wrote beautifully and quoted in the documentation, which is available for everybody. And the levers are dynamic and updating key pivots and weighting them towards the most significant levels. So it keeps continuously weighing certain price levels, specific price levels. If we were to tune out everything, turn off everything, the price, disable the price bands, we have a trend coloring. If we don't like the trend coloring, then we have black and orange and black, or green and red, whatever. But you can enable, you can basically if you are a minimalistic person, if you love minimalism, and if you hate any noise in the chart, you can basically turn everything off and leave just even the baseline. You can turn everything off and leave just the price coloring, and you can tell that whenever the candles are the orange, they are bullish. Whenever the candles stop being orange, they are bearish. Right, so you enter on the first bullish candle and you close on the last bullish candle, just as an instance. Similarly in here, right, you stop seeing the trend neutrality with the grayish or the black candles, and you just close up the position that you open up in here, right? Then you have the profit of this entirety. This is what happens if you are a trend minimalist. I mean, if you are a technical minimalist and you love minimalism in general as a whole. right? But what I said, you can also use and enable the automated levels, the BPro level lines, okay, that basically do the job for you. They are the main technical supports and resistances based on the continuous change of the price action. This tells you that these are the levels that will keep adjusting depending on the price, depending on what happens in the market. These levels are going to be updated. And if there is a strong movement, then the support, you would need to manually search for support resistance and resistance in a way that, okay, you see the resistance in here. Previously, you had a resistance in here, but then, well, you never know if the actual resistance is here or it's here or it's here or it's this entirety, for example, right? So what it does the job for you, right? And it tells you automatically where is a specific resistance. And for example, it told you that after the breakout of this, the next resistance was basically somewhere in the upper part. But because current price action defines these levels, these automated level lines, this is something that keeps updating. This is something that keeps adjusting. So based on the current price action, the most important levels that you can tell for Solana, for instance, is 178.93. And if this one breaks, well, then you can play it as a level to level kind of like basis, right? So we can tell whenever 178 breaks down or so is properly lost with a strong, ugly daily close below, then the next one is going to be 141. But now that you properly see a first strong daily close outside and over 178, then this is attracted more towards the new resistance of 235. 235, right? So this applies for Solana. This also applies one of the I think charts that I was recently checking was, I think it was Kudos. Let me refresh that. There was a Matic, there was FTT, there was Doge, there was Litecoin, which is looking quite nicely. There was Radium, which is actually which is something very good. I think I posted that in the Discord yesterday, right? When I posted this Christmas call, when I posted this early trend confirmation from the BPro, right? And I posted at 7:38. It's 7:77 already. I think it's already marked. No, not yet. It's about to mark. It's the first technical TP level, the target level. But for now, even if you turn everything off, right? Or for example, want to leave stuff, just like you would have the baseline filter, then I use the combination of these and target levels for the trade setup based on the automated levels of the BPro. So based on the current price action of the Iridium, you would have the, well, next target at 8.959. But for the Kudos, I'm not sure if it's going to be here. It just recently attracted my attention very well because it was pretty undervalued from what the last time I was checking. So here, well, this is KuCoin, right? And a KuCoin you would have a lot of wicks, but even if you take, well, if you take the chart per the level lines applied, then you can tell that, well, locally this was a support level that was actually more or less maintained because this was a BWAP. This was Barbicator volume weighted average price, Birb volume weighted average price, no matter how we call that. It was volume weighted average price based. And this told you that anything above it is basically bullish, anything below is undervalued. Okay. Anything above is overvalued, anything below is undervalued. This is how you read it. And even if we take it and apply the high time frame trailer, right, or even the current time frame trailer, then we usually there is a setting that you would want to adjust for, well, where do you have it? For both, combination of both. Usually you want to have that high time frame trailer, which is like this is a daily chart, right? This is a daily chart, and you would want to have the current time frame trailer as this is your default chart time frame, which is daily, but you can also have something that is, well, picked out of the list. So you can have usually 3 positions. This is daily, right? So you would go for 1, 2, 3 steps lower down the ladder and go and land with 4-day or weekly time frame for the high time frame trader, right? And let me turn off. I think in a second my alarm is going to go off because I'm supposed to be leaving in a second. Let me just get it a bit longer. So yeah, in a couple of minutes, I still need a couple of minutes to get you guys everything you need to know about it. But this is a proper case study of how trading systems work, right? This is a combination of many different indicators that you can apply and actually to come up with a single conclusion. And trading is not easy at all. It consumes a lot of time. It consumes a lot of energy, right? Whoever tells you trading is easy, they are probably lying. They are wrong about that, right? Even if we go towards like lower time frames, well, the lower time frames, I'm not sure there is overall like huge amount of liquidity on the micro time frames. Perhaps KuCoin is struggling with it somehow. But if we go, will it change anything? This is Bittrex. I wouldn't really go for Bittrex, to be honest. Perhaps on Uniswap. And I like the previous chart better. When there is much noise, because for example, the liquidity on an exchange is, I'm just showing you this, right? Because on decentralized exchanges, it's not really applying in trading, so we need to go elsewhere. But if you were to have, well, some high noise with a lot of weeks with less liquidity, just for instance, you can go and tune this out with the help of line chart, okay, which helps you find the proper trends and movements without the noise, right? And you can apply the BPro in here to tell you basically about the local levels that matter, right? Which is the support level at 0.02931 or the resistance, local resistance here, which is quite likely to be tagged 0.03465. Or if that happens, again, you can play that as a level to level basis. If that is a strong close through on a daily basis or on a 4-hour basis, then you can expect the next target at 0.45 to 0.045 to be targeted, right? If we go for the higher time frames, again, and if we apply 3 positions with lower, which is 1, 2, 3, so can do anything between 3-day and then 4-day for the high time frame trailer. Well, this is quite a powerful combination. If you, for example, want to turn off the levels and you want to decide about them automatic or like discretionarily in a discretionary manner, then you can also enable something that is called the pivot signals. Anytime there is a pivot, in the pivot signal, the market is potentially risking a reversal. Even if you are a scalper, although I'm not really practicing that too much, even if you're a scalper, you can actually apply the scalping kind of like, just indications in here. And anytime there is a scalping indication in the direction of a trend, you get a message. You get a proper kind of like a signal in a way. And by the signal, I'm not necessarily. A signal is an information. Signal is a feedback. Signal is a computer-generated information, annotation, okay, an alert, if you will. Well, if we were to play the baseline, if we were to play the baseline bands or the momentum bands, if you were to play also the demand and block visualization, then you have quite a lot of tools that you can choose between. And each and every single one of these can be used in isolation. You can use that just as the baseline and tune off everything else, right? You can just use the baseline for it, right? To me, the fact, well, if we were to with the trend coloring, right, you can anticipate that, well, if the price action closes like that, this may be a first candle for Kudos USDT, just as an instance, as a case study. This may be the first time, okay, well, that the market may originate with a new form of an upwards trend, right? This might be the case. which you saw either here or in here, right? So yeah, I mean, it's quite a useful case. It's quite a useful tool that I use. You have volume weighted average prices. You can apply that with combination of patterns, supply and demand zone visualizations. Just like I am saying, you can apply supply and demands automatically, right? And they evolve. They are dynamic. They evolve over with the time as well. And just like I said, it applies to Matic, which yesterday I was asked whether Matic was good. Right now, it's actually breaking its all-time high, so it's good, right? This is something that I was expecting. I'm not surprised. FTT, Doge, Litecoin, Radium, which is pressing very nicely, and all these can be used in a very single manner, and you can also tune everything down and off just to leave the trend coloring, and you have very pretty straightforward information, whether the trend is bullish or bearish, and the information that you want. And with this coming daily close like that is going to be the first bullish candle, the start of a new trend on a daily basis as well. This is what the BPro indicates. I love it so much. Listen, I wish I could go I could go on and on. There is the presentation that I gave. I think if you want, guys, I'll be able to give it to everybody who wants it. The only thing you can apply, I think, how to do it. I think we're going to post it in the video description. And somebody's asking, when will it be live? So the good news is that it is already live. It's already live. When you go to the birbnews.com, there is a specific tab, right, for Barbicator Pro here under the services, which you can get for a monthly option, for a 4-month option, or for a yearly option right away if you want. Okay, there is everything you need to know, and the guide is here. You can read it 24/7. If you like it or not, you can decide accordingly. And most important point, everybody, is that everybody, I think I posted it in the announcements, but everybody, because we are celebrating very soon the 4th anniversary of the Birb Nest, of the foundation, since 2017. Everybody who's going to get right now, like who's going to have at the specific time, I think it was 25th, which is tomorrow. It is tomorrow or on Saturday. Everybody who already purchased, or they're yet about to get it, then everybody will have the chance to get and win 4 annual membership subscriptions for the BPro. So just an instance, if you haven't got it, if you want to give it a try, you can, for example, this is what actually a couple of guys asked me in the DMs. You can get in for the monthly, just not to spend too much money, right? And you can have the chance and take part in the contest and win 4 annual memberships today, right? And I think it's a pretty fair deal to celebrate the 4th anniversary, 4 years of the Birb Nest, 4 annual memberships and access to Barbicator Pro. I use it. It helped me print signals yesterday for Radium. It helped me print signals and warn everybody about the new upward trend starting yesterday, also in the Bitcoin report, which was open. It works. It really works. I'm surprised that it works this fast, and that it works this well. But Signalify made sure this was a rocker. This is mind bender, everybody. And listen, I think there's been enough of case studies, a lot of knowledge, trading styles, trading strategies, trading systems, custom systems, technical indicators, technical analysis, and Bitcoin's expectations. Well, most likely we are starting a new upwards trend, just like I was doing the case study over the Bitcoin with the application of Barbicator Pro, it tells you that the new trend might be starting. So the next couple of days should have some promising price action for Bitcoin, more for the bulls. Everybody, I hope you stay safe. I need to be going. I hope you guys take proper care. I love you all, guys, wholeheartedly from the bottom of my heart. I wish all the best to you. Merry Christmas. I hope that God blesses you and all your families, all the people that you love. Take some time off. We are going to work as usual in the nest. We are going to take turns. So if you want to get in with the BPro and get the chance to win the 4 yearly memberships, free of any charge, like win it just for the sake of having, just by the sake of having the BPro, then you can get it on the website, on theburbiners.com. You can go ahead to theburbiners.com, to Barbicator Pro. We are going to put it in the video description as well to the YouTube. If you're watching that, if you enjoyed this webinar, everybody, make sure you smash the likes, hit the subscribe button, turn the notifications bells. There is more coming, many more coming, guys. I want to say thank you for joining in. Thank you for tuning in. God bless you. Stay safe and Merry Christmas.